Welcome back to another episode of Multifamily AP 360. And today's our guest is Deepa Reddy Akula from JT Capital. Welcome, Deepa.
Thanks, Rama. I'm very
Yeah,
excited to be here. Thank you for the opportunity.
sure. And thank you very much, Deepa. Let's start with introduction. Go ahead and share a little bit about yourself, Deepa.
Yeah, thank you. So by training, I'm a mechanical and aerospace engineer and designed overhead telephone structures and transmission lines for 14 years. And while doing that, I would just come home and look at real estate for fun to decompress, look at more numbers to decompress after doing 8 hours of number crunching. And I just realized that I just am very interested in real estate. And when me and my husband were looking at places to place our own capital, just was looking for passive opportunities because we had an infant at that time, couldn't really take on any active investments, and stumbled into syndications. And as I was an LP, learned a lot more and got opportunities to be a co-GP. And now I do this full time. I'm with JT Capital. I spearhead investor relations and capital raising arm for JT. And yeah, this is what I do now.
Awesome. Thank you. How did you get into real estate? Share me a little bit about our co-GP opportunity also.
Yeah, sure. So I started as an LP, like most of us. I started as an LP, found a syndicator that was local, met her, really liked her. She was an engineer too, and started as an LP, wrote like the minimum check first to have proof of concept. And just being on the sidelines too, I had analysis paralysis and did just learning for 3 years. And when my first opportunity came in, I was just reading through the PPM and everything that they provided, subscription documents, the operating agreement, and everything. And I did not know that at that time, like not many LPs do all of that. And I was asking questions to the sponsors, like, hey, I think some of your wording is off because you call one thing here and you call the same thing something different here. You need to talk to your attorneys and have the same nomenclature everywhere. And she was like, seriously, you caught that? I was like, yeah. And they were impressed, and I didn't think it was a big deal. So just digging deep.
Sure. Yeah. How exactly got the real estate, first deal opportunity or co-GP opportunity, Deepa?
Yeah, thank you. So, like everybody, I started as an LP and was just digging deep into all the documents that the GP provided. For as an LP, the subscription documents, the PPM, and the operating agreement, all of that. And I just realized I was digging in deep and asking questions that a usual LP would not ask. And that actually impressed the GP. She was like, hey, did you actually catch this? And it's like, yeah, I read it a few times. I'm like, you read it a few times? Not people don't even read it once. And I was like, yeah, I read it a few times and I saw these discrepancies and caught it. And that kind of put me on her radar. And as I was doing more and more and helping out more and more, I was also talking about our opportunities, how we were getting good returns in our LP investments. And just talking about it, our friends were interested in investing. And I was referring them to the sponsor. And she was like, I can't, this is 506B opportunity. I really cannot accept their investments. And by then, I was also on the asset management calls, just kind of helping out, taking notes, doing whatever needs to be done. And she was like, okay, you're already doing all of this, and you can write investor reports just by reading, just by learning as an LP. And she goes, do you want to be a co-GP and just do asset management too, learn asset management and write the investor reports, at least the first draft, and do all of that. And that's kind of how my first opportunity came up. It was just adding value and showing that I was interested in learning. And that's kind of how the first opportunity came in. And it's a small world, right? I had invested with two different syndicators, owner operators as LP. And the second operator, they also reached out and said, hey, we're working on a project and you're one of our LPs and we heard you were raising for another syndicator. Do you want to work with us? And I had already did all my due diligence with them because I was an LP with them. I had written a 6-digit check. So they were like, I did my due diligence, and they know me, I know them. So I was like, okay, sure, let's just work together. And it was very organic.
Thank you for sharing that. So you're also LP investor, right? So what other questions we need to ask investors, or what other, deeper questions we need to see or we need to ask with, general partners?
Oh, thank you for that. I learned a lot going through 2023. Last year it was a rough year for commercial real estate in general. And we have to ask about the team and the market and the deal, all of that. But first, the team, like how many people are on the team and how cohesive are they? Are they part of the same company? Because you don't want people to just kind of form a partnership for this deal before, and they did not work together in the past. They really would not know how they work together on a live deal. So I would just find out how long the team has been working together and what their roles are, and definitely make sure at least a few people, at least one person has a finance degree on the team. Because when the downturns happen, like 2008 or 2023 or 2012, for us who've not been in the industry, in the finance industry, we would not really know how fast things can get bad. When the interest rates start to go up, you just have to have somebody with formal education in finance on the team, and they should have gone through a few downturns together as a team. They should have been through downturns and come out of it, and ask for the track record. And yeah, just that, concentrate on the team. And if you really like the team, then you can ask about which areas that they invest in, what focus areas, which states they focus on, and yeah, their execution. And I would ask to talk to one of the references, current investors. And yeah, that's how I would do my due diligence.
Yeah, thank you for sharing that. You bring like, a different point, like someone should have financial degree. So if someone have financial degree, how exactly that will helpful if already existing deals?
On the already existing, see, it's too late on already existing deals, right? That means you're
Yeah,
already invested.
yeah,
But even on the existing deals, they can think about creative ways of how you can work with the lenders, loan modifications, whatever it needs to be done. They just have gone through the formal education and they know the patterns, right? It's all about the patterns. That's what Ray Dalio's book taught me. That's how he built his Bridgewater, right? Just in the past, things would have happened in the past before our lifetime. And, we can get caught if we don't learn from the patterns that happened in the past. So just having that formal education and learning patterns and knowing what can happen and what happened in the past and how we can, adjust is a big help.
yeah, predictability, right?
Right. Yeah.
So how exactly we can apply that, new deals, right?
For new deals, you know, just by having somebody with finance backgrounds, they will know if, you know, how the rates are going to progress. Nobody saw what happened in 2023, right? Or starting 2022, the rates kind of went up really fast, really high. But having a rate cap in place is a lifesaver, right? I mean, if you would have known, you would have bought like in the money rate cap, or 50 basis points or 25 basis points rate cap. Just having those hedges in place will help out. And I believe somebody with a finance degree would be conservative enough to have that in place.
Yeah, totally agree. Thank you very much. Share me like you now through like one of the LP invest opportunity, you got the GP opportunity, right? So what kind of role you performed there? So yeah.
Yeah. So the very first deal, I could talk about one of them. So they were all bridge and they went full cycle. Fortunately, when the market was good, and we had some bridge deals that were smaller deals, about a little over 100 units, that we were able to renovate in time and refinance before the rates went up. So we have like a 2.6% fixed interest loan on it. So we either refinance into a fixed interest loan or we are in the refinance process currently. And after the rates started going up, we bought everything with fixed interest loans.
So basically you performed asset management role right there. So what are additional, like, from asset management point of view, like interest rates went up, and also like insurance went up in some states like Texas or Florida, and also taxes also went up in some states like
Right.
in Texas, right? If your properties in those markets, so it's like, interest rates went up and all this expense also went up. So what kind of, opportunities, what kind of, business plan you guys implemented to cut the expenses, also increase overall net operating income?
That is really important, right? When the rates start going up and the expenses are going up, and we were also fighting some properties that were coming online. So
Sure.
we were also competing against properties that were leasing up. So we were fighting lease ups. So getting squeezed from all directions, your income is going down because people are leaving the asset or something like that. And you are having to do concessions, right? And that is leaving money on the table to keep the occupancy stable. And also the expenses are going up, inflation's going up, everything else was going up. In those times, you just have to hunker down and really, really focus on asset management, really focus on how we can get the income up and expenses down just so that we can get through the storm. And what we did is we really, really focused on making sure the resident experience was really good so that a happy resident, will not really think about leaving. If you make it more than just an apartment they live in, you know, if you compete on cost, then there's really no loyalty. Wherever the cost is low, they'll just leave. You want to build a brand. Like at our units, we would just say, hey, we'll provide breakfast in the morning. So just stop by the office, or the staff would stand outside and hand out breakfast as people are driving out to work. And we would communicate that way in advance. And we'd just do different things to make residents feel like they're really part of something bigger. And it's not just an apartment they live in, just organizing events and having vendors pay for it. We have a lot of vendors, right? Like pool vendors and landscaping and insurance. Like there's so many vendors that we work with. Just giving them the opportunity to sponsor it, and making sure that our residents have a good experience. And we were focusing on getting multiple bids on everything. I mean, that's just best practice, right? To get multiple bids on everything. But we were digging in deep and trying to get more bids and just increasing the overall experience. How do you stand out? Not competing on price because we don't want to reduce the rent anymore. We'll take a hit on the income at that point if we did that. So we were just concentrating on, pool parties or throw a movie by the pool and have a popcorn machine. It's not that expensive, but it just really enhances the resident experience of living at that community.
Yeah, that's good points. And if you provide breakfast, who will leave, right? So that's great thing.
Yeah.
Yeah, awesome. Thank you for sharing that. How long you're working
Okay.
with that company, Deepa?
So yeah, with JT full time, coming up on a year right now, but I was co-GPing with them since 2020. So for about 3.5 years,
Yeah,
I was an LP with them first,
yeah,
and then a co-GP on a few assets. And I'm a civil structural engineer. I'm a licensed professional civil structural engineer. And when I was in service as an engineer, I was licensed in 9 different states. So I would go out for due diligence for the structure and just help anywhere I can. And that's what I was doing as a co-GP. And I would also be on the asset management calls and help out that way.
yeah.
And eventually I got an opportunity to be the member of the team. And I really like how active asset management wise we are. JT team is. We're very proactive. To give you an example, we had a new community manager at one of our Florida assets, and we didn't want to really give her free reign and just wanted updates, every day before the end of the day. And we would slowly relinquish as we gain confidence that she's capable. We would slowly make it weekly updates and monthly, but we meet every day, every week, and we talk to her every day, right? So there was an email update email that came in one day, and there were 3 of us JT folks on the email that she sent. And she goes, this particular unit is requesting a transfer. And I didn't even have to look at the rent roll. I knew that was a delinquent unit. I was like, no, we don't transfer that unit anywhere. They transfer out of the property, not into another unit. And then she immediately said, oh, I was just finger happy, and that's not the right unit number. This is the actual unit number. But just the fact that 2 of us caught that without having to look at the rent roll, and the third person didn't catch it because it was late. They're in the central time zone, and I'm on the Pacific coast. So just because of the time zone, a couple of us caught it, and the third person would also have caught it. So we know which residents are troublemakers, which residents are delinquents, who are good residents. And at some of our assets, at one of our assets, we have like a really big Arab community, from UAE. They go to college in that town, and they were leaving candy wrappers by the pool. There was like a really large community, and we knew who the leader of the community was. One of the residents was there, kind of like a leader. They all looked up to him. And we talked to him, go, hey, could you please tell your community to not leave candy wrappers? And that was it. That's all it took. It got fixed. And I can personally attest that I actually picked out one candy wrapper from the pool when I was, visiting the property at one point. So we really know our residents, and that made me feel really, really comfortable joining the team when there was an opportunity, when they were expanding.
Awesome. Thank you. So what kind of role you're performing right now?
Currently, I am spearheading investor relations and capital raising for JT.
Can you expand on your role or your day-to-day responsibilities?
Yes, of course. So I'm responsible for getting back to investors, current investors, any questions they may have about the assets, about the tax forms, pretty much any questions that they need, the FMV, fair market value for their IRA accounts. So anything that has to do with the current investors, I help them out, and also just working on future raises. And I'm working on a fund right now that is slightly different from a single asset acquisition. And currently we are raising capital for that.
Yeah, sure. And if you're comfortable, please share a little bit more about your fund. I think it's 506C. So,
Yes.
yeah.
Yeah, thank you. Yeah, it is a 506C fund, and it's for accredited investors. And the basics of the fund is we are investing in operationally efficient assets, small chunks of capital, like $3 to $7 million in institutional grade assets, and helping the sponsor and the asset get to a refinance or a sale. So it is like lending money for them right now. They have a lot of equity in the property, so they are having liquidity issues right now. And the liquidity issues is also because of small and medium banks have a lot of exposure to commercial real estate, and they're not lending. And a lot of bridge loans are coming up for maturity, and they need to refinance into something else, a HUD loan, for example, into a fixed interest loan. So we would help out the sponsor by providing liquidity right now, and it would be a cash out refinance whenever the refinance happens. For that to happen, it has to be a really low loan to value on the asset. So we'd only work with assets where there is a lot of equity cushion. And for that infusion of capital, we get control rights on the asset. And we are getting these deals from the lenders. The lenders are actually bringing us the deals. So the sponsors are well vetted, and the properties are well vetted, because as lenders, they know exactly what's going on because they get reports as to how the asset is performing. And yeah, it'd be a quick 6 month to 12 months deployment. And we would just keep rolling the capital into other opportunities as we see them. And there's a class A, which is a $50,000 minimum, gets a 12%. It is straight up 12% coupon clipper. And for a 100K minimum, we do share upside, and it's a 10% preferred return. The pref is higher than usual because we are seeing such great opportunity. And there is need in the marketplace, and we're only working with institutional assets. And because we're predominantly working with institutional assets, bigger institutional funds like BlackRock and Blackstone, these big guys, don't want to invest like $5 million, right? It's too small. They have billions to deploy. And the guys that can deploy that kind of capital, they don't have access to the deals that we do because we are getting these deals truly off market from the lenders.
Awesome. Thank you
So
very much.
yeah.
Sure. And what's your company's plan for next 2 to 5 years?
Yeah. So we think that this opportunity is here to stay for 3 to 5 years. Because even if the rates went down tomorrow, it'll take a few years for the banks to get the non-performing notes and their exposure to real estate down to a reasonable limit where they can start lending again. So lending is going to be tight. Right now, the rates are high, right? Fed did not even cut the rates once since they increased it. So I don't think they'll cut it as fast as they increased it because then, inflation might take off again. But that's just my speculation. Even if the rates went down fast, this opportunity is here to stay until banks adjust to the new norms. And, the banks have to increase their reserves too. So they're having to hold more capital liquid and worry about these notes on the exposure to commercial real estate. So it'll take a few years for them to sort all of that out. And the fund, in the meantime, will be taking advantage of that funding gap.
Awesome. Thank you very much. And would you share any best experience in real estate space?
Yeah, some of the best experiences, I guess, is the people. They're very, very inclusive. All of us are working on our own for the most part, right? Even if you're a part of a team, it's just different in real estate that people are very inclusive and very helpful. So just people,
Yeah,
that's the best part.
awesome. And would you also share any challenging experience?
Of course, yes. So going through 2023, I personally, as an LP, did have challenges with some of the properties that we invested in, and we did lose capital. And we learn a lot from the capital that we lose, right? When we make money, even in the stock market, like anywhere we make money on an investment, we're like, oh, we know what we're doing. And I don't know if we dig deep into why we made money, but when we lose capital, that hurts. So you just like dig deep and learn from that experience so that you don't have to go through that experience ever again. So that was one of the worst experiences.
Yeah, thank you. So any personal habits that are helping you to be successful?
Any personal habits? So just networking in general, is just giving, adding value without expecting a lot. I met an investor, a friend actually, who is, a little bit maybe has more experience than me. And I was like, hey, I was pointing at people saying, hey, this gentleman might be interested in your offering because they are owner operator too. And he goes, Deepa, in my experience, everybody is an investor. All you have to do is just add value. Just add value. And personally, just adding value and giving as much as we can and giving away the secret as much as we can. Some of the personal habits that I believe is just writing. I write 3 things that I need to do the next day. And those are the first 3 things I do. It's more like rocks first in the day, like the big items, then pebbles, then sand. If you put sand first, there's no time, there's no space for rocks. So just do the first things first and the most important things first. And I also learned that from a book called Eat That Frog. So
Traction?
I'm sorry.
Traction?
Traction. No, I haven't. No, I don't know. Not from Traction,
Okay.
but Brian Tracy's book,
Yeah.
Eat That Frog.
Okay.
Yeah, yeah. I don't remember that from Traction though.
Yeah.
Um, but Eat That Frog meaning you just like do the first important and unpleasant job first, get it
Yeah.
out of the way, and then the rest of the day is like a breeze.
Okay.
So
Awesome. Any one personal learning that has played a part in creating massive impact and powerful shifts in your own life?
yeah, so it is very simple, but it just never clicked to me. Is and I had to hear it twice for it to click. I read the book What It Takes, and this is by Steve Schwarman. And this gentleman is like built Blackstone, and he just says, just do it. that's all. The whole part of the book is he talks about how he came up in life. He's like, just do it, just get started, just do it. And on a personal level, I was talking to this is when I was still in engineering. I was talking to somebody put in flooring, like new flooring in their house. And I go, seriously, that's a lot of work. And how did you learn how to do it? And he goes, you don't learn anything. You just learn by doing it. You just go to Home Depot, get all the things, and you figure it out. You just do it. And that's how you learn. I was
Yeah.
like, yeah, that's right. Like you learn by doing it. You don't learn and keep postponing it. You just do it and learn by doing it. So,
Yeah, good point. So any books that impacted your life?
yeah, what it takes is was big. And the 4-hour work week just got me started on even the mindset that it's possible. Those two, and Becoming by Michelle Obama was pretty impactful too.
Awesome. So how can listeners can connect with you, Deepa?
I'm active on LinkedIn, and you can find me on LinkedIn at Deepa Reddy Akula.
Awesome. And thank you very much, Deepa. Thank you for sharing your journey and also your experiences as LP, co-GP, and also now, investor relations director, right? Thank you. Thank you very much.
Of course, yeah, I really enjoyed it. Thanks, Rama.
Thank you.